Namaskar, respected Dr. P. Chandrasekhar sir, Director General Manage, and Sri Ritesh Chauhan sir, JS Credit and Chief Executive Officer, Pradhan Mantri Fasal Bima Yojana from Ministry of Agriculture and Farmers Welfare, Government of India. Officers from Credit Division, Ms. Pallavi, Sri Umesh Kumar Sharma, Sri Sunil Kumar, directors, program coordinators, project directors joining from different committees, KVKs, Atmas, and participants from various other organizations. Namaskar and welcome to this webinar on access to agriculture credit and Kisan credit card being organized by Manage in collaboration with Credit Division, Ministry of Agriculture and Farmers Welfare. The program mainly aims at sensitizing officers working for different departments from different states on agriculture credit and Kisan credit card. Through this webinar today, we will try to understand the importance of agriculture credit in agriculture, the entire ecosystem of this Kisan credit card, what is the process to avail Kisan credit card from bank, and probably the most important, the role of the state government officers and functionaries, extension functionaries mainly, to take this message to the ground. Structure wise, as I already indicate, we are having 4 sessions, and after that we will have some time exclusively for discussion. However, we will have technical session after this inaugural session where we will get the opportunity to listen to 2 eminent personalities, Dr. P. Chandrasekhar sir and Sri Ritesh Chauhan sir. First, I'll take this opportunity to invite Chandrasekhar sir, Director General Manage. Manage is an institute operating under Ministry of Agriculture and Farmers Welfare with objective mainly to strengthen the agriculture extension system in the country. DG sir.
Thank you, Dr. Shailendra. Good morning to all of you. On behalf of Manage family, I would like to extend a warm welcome to everyone present in this webinar. I'm very happy to see 54 people now. I'm sure that the number is going to increase. It is our privilege to invite Sri Ritesh Chauhan, Joint Secretary Credit, to this webinar. Sir, on behalf of Manage family, I would like to extend a hearty welcome to you. I am seeing Pallavi from credit team and many officers are also here on behalf of Manage family. Again, I would like to extend a warm welcome to every one of you. I'm very happy to see officers from agriculture and line department from different states, Atma officials, KVK officials, Samiti, and our extension education institutions and many other private sector people are also participating and taking the benefit of this webinar. I would like to thank my colleague Dr. Shailendra for organizing this wonderful webinar. Few thoughts about this webinar. When we got the independence, the major focus was on pushing the technologies. They are capital intensive technologies, high yielding varieties and fertilizer, pesticides. The entire extension functionary, they work for promoting these capital intensive technologies. But the big question, where is the capital? So the farmers, they were convinced about the technology, but there was no capital. They surrendered to money lenders. The money lenders, they gave money, they gave inputs, they charged a heavy interest, and it is important to know that for giving 100 rupees loan, there was a system where I myself was a witness. They collected 100 kg paddy at the end of the season. So after every harvest, the farmers were pushed below poverty line, whereas the money lenders, they aggregated a lot of wealth, which is coming out of advancement of agriculture. So thanks to Credit Survey Committee Report 1954, nationalization of banks 1969, establishment of NABARD 1982, and the launching of Kisan Credit Card 1999. These 4 milestones, they changed the credit ecosystem in the country. So credit is very, very important. But in spite of all these efforts, 1/3 of the farmers, they do not have access to institutional credit sources. So the only objective of this particular webinar is to reach the unreached. how we can create awareness about Kisan credit card to unreached farmers. And one of the important aspect is when our entire extension system, when we consider seed as an input, fertilizer and pesticide and technology information as an input, we are yet to accept that the credit as an input. It is not the job chart of our extension workers. We have more than 1 lakh public extension functionaries and equal number and more than that private extension functionaries are there who are guiding the farmers. They have not accepted credit as an input as a job chart and responsibility of extension work. So this is very important to convince every extension worker. Large number of extension ecosystem stakeholders are present here. I am sure that they will take the advantage of this webinar. They will get complete information so that further information will be disseminated to farmers. So thank you very much. Thank you for this opportunity. I am sure that extension workers will make use of this great opportunity, and many more programs will also be conducted in coordination with Credit Division in future. Thank you very much.
Yeah, thank you very much, DG sir. So DG sir mainly highlighted about the orientation of extension workers in taking credit, because many times, as DG sir highlighted, extension worker are focusing on so many things but not credit. But when you are speaking application of any technology, any input, credit invariably is required. So in that sense, that orientation is required. Thank you very much, sir. Now I would like to invite Sri Ritesh Chauhan sir, JS Credit. He is one of the important member of the core team at the ministry responsible for operationalizing the concept of credit and KCC in India. I would request you for a special address, sir.
All right. Good morning to one and all. Let me begin by saying that it is indeed a pleasure and an honor to address this gathering today on this webinar. We all know agriculture and allied sector is a prime moving force of our economy. And agriculture credit per se is vital for increasing agriculture production and securing the income for farmers. Availability and access to and low cost from institutional sources is of great importance, especially to small and marginal farmers, which constitute about 86% of all farmers in the country. Now, it has the easy access to financial services at affordable cost. As we all know, has a very positive impact on productivity, asset formation, income, as well as security of the nation as a whole. Therefore, it is conventional wisdom, it is accepted that credit is essential for establishing sustainable and profitable farming systems. Now, I'm happy that in collaboration with Manage, Government of India is introducing a series of webinars on agriculture credit and crop insurance as a whole. This first webinar today is on the topic of agriculture credit and KCC. And I'm glad to know that participants from extension functionaries, including Samitis, KVKs, Atmas, as well as state government officers who are instrumental in carrying out extension activities at the field level, are participating in large number. Now, from the Government of India's perspective, let me put across that the Government of India has set about 20 lakh crore as the target for financial year 23-24, through which agriculture credit has to go. And KCC, Kisan Credit Card, as we all know, is the major delivery vehicle for carrying this credit to the fields of the country. We offer collateral-free loan up to 1.6 lakhs and an interest subvention of about 1.5% to all the financial institutions, that are banks and other institutions that offer this credit. Now, it is important to note also that within the KCC ecosystem, Kisan Credit Card System, In 2018-2019, Government of India extended KCC to allied sectors also, meaning that thereby not only to farmer cultivators, but also to people engaged in animal husbandry, dairy, and fishery activities. So this path-breaking innovation has happened recently, and we are now seeing results of it with more and more animal husbandry, dairy, and fishery farmers joining in the KCC ecosystem. To further bolster this, Government of India launched a KCC saturation drive, the first of which is nearing its completion. We plan to undertake a full-fledged KCC saturation drive shortly in a phase 2 manner to take care of the remaining farmers. I'm sure that during this webinar, some guidance will be given to you in regard to the phase 2 of this saturation drive. In order to ensure that we get better numbers and we do better end-to-end monitoring, we are also developing a integrated KCC MISS portal and targeting that all the banks and all the Kisan credit cards get their interest subvention and other benefits through this portal itself. Now, as stated earlier, the government intends to saturate all the PM Kisan beneficiaries with a Kisan credit card. So today I call upon all of the extension functionaries that are participating in this webinar to increase, to organize publicity and awareness camps for mobilizing potential PM Kisan beneficiaries to enroll under KCC, to support the banks and rural bank branches when they approach you or when the second phase of the saturation campaign is taken up. And also, I must bring to your notice that we have simplified the KCC form to a single pager form. So a farmer can just fill one page and provide some documents to get the KCC done. Not only this, along with farmers, SHGs, joint liabilities groups, FPOs, federations can also avail all types of KCC benefits. Now, with this, I extend my heartiest congratulations and best wishes to manage and their team, senior officers from the ministry, faculty members from BIRD, and I'm sure that they will conduct this seminar in a way which brings synergy between the extension functionaries and the credit functions that we intend to take to the fields. Thank you so much for having me today, and I look forward to a positive engagement during the course of this seminar. Thank you.
Thank you very much, sir, for highlighting the importance of credit for sustainable and profitable agriculture. And sir also highlighted how comprehensive this entire concept of Kisan credit card government has made in recent past. And that's probably is the biggest message for each one of us who is working directly or indirectly for the benefit of farmer, that we have to understand the importance of credit. And government has also recognized the importance of credit in agriculture development. You can just understand this from the numbers 20 lakh crore. So that's a really huge amount. So that's for me probably is the biggest message, that we have to understand the importance of credit. And during this webinar, we will try to understand all the aspect, and we have to take that to the ground. Thank you very much, sir. Now I'll request Pallavi ma'am to propose word of thanks. Pallavi ma'am.
Good morning all, respected DG sir, respected CEO sir, and JS Credit. Thank you very much. We are very glad to initiate this webinar series on agriculture credit and crop insurance, which are the two most important schemes being implemented by our division, credit division. And these two schemes are of the prime importance with respect to the farmers, their needs for the agriculture credit, as well as protecting them from the natural vagaries. DG sir have highlighted the importance of agriculture credit for farmers, and probably KCC is one of the key instrument in taking the short-term needs of the farmers in agriculture. And CEOs sir and JS credits are also highlighted the importance, the priority for the government of India in delivering these particular schemes, particularly the KCC and the agriculture credit, and as well as the various initiatives government is planning to hold in next few months, few years over a period, so that we can able to cover maximum number of small and marginal farmers, which are a very crucial component of Indian agriculture. So on the behalf of Ministry again, I thank DG sir as well as JS Credit sir, and I also like to thank all the participants who have joined, who have taken the time to listen to these two important areas. But today we'll be dealing with, of course, agriculture credit, and we also have the senior officials from the ministry and the faculty from there. So again, I thank all the participants and our guest of honors, DG sir and DG sir. Thank you, sir.
Thank you, ma'am. Thank you very much, sir. Thank you, JS sir. Thank you, DG sir. Thank you, Palvi ma'am. Thank you.
As we are discussing since morning, the inauguration session about the KCC, importance of KCC and its ecosystem, and how why and how it is very much required for this Indian agriculture. See, this subject KCC is a old bank product of 1998, but still we have to do lot of things in this KCC, and we have to cover the entire country's farmer. Even with this all the lending since 1998, bank has not covered all the farmers. So today we are going to discuss about the overview of agriculture credit and Kisan credit card. First of all, the KCC is at present is the backbone lending product, you can say, for the farmers. Agricultural and land sector in India, this engages 54.6% of the total workforce in country, and secondly 18% of the gross value added in the country's GDP. Third is the India is amongst the 15 leading export in agriculture products. So now our country has gained after this after independence 15th position in the agriculture export, and resilient growth in 3.9% in 2021 despite COVID-19 shock. Supports 17.8% of the world's population and 15% of the livestock population. See, this shows that after independence we have done lot of things in agriculture, and this agriculture has become the backbone for this country. Until unless we are not providing the sufficient amount of credit to this farming community, the growth what we have achieved cannot be increased to the extent as desired by the government of India. So the importance is in the agriculture as well as allied activities, both have parallelly grown, and now we are at a very comfortable position, you can say, in the world ranking position to have a agriculture produce with which we can provide support to other countries. Next slide. Need for agriculture credit in India. The basic requirement for the farmer is the for cultivation is the credit. Until unless credit is not there, how they will manage their entire operations in the agriculture. So the prerequisite for agriculture growth, financing is specially adapted for specific finance needs of the farmer. Here, the specific needs means suppose a cultivator is growing particular crop, he needs seed, fertilizer, everything, and similarly for other activities, he needs fodder and other equipments and maintenance of farm assets. These are the expenses he need while cultivating. So these are the prerequisite for agriculture growth, and financing especially adapted to the specific finance need of farmer. Second, dominance of small and marginal farmer, owing 86% of the land holding of less than 2 hectares, short-term credit requirement is higher. As our Indian economy, 86% of the farmers are small and marginal farmer having less than 2 hectares of the land holding, and they require their number is more, so they require all this short-term credit for their KCC in terms of KCC for cultivation, and here is the scope for the banking institution or financial institution to jump into this economy and help the farmer by way of providing KCC so that they can be growing they can grow their farms and agriculture productions in a better manner. Only 48% irrigation facility, high vulnerability due to the natural calamities. This is another area where in our country we could provide only 43%, 48% of the irrigation facility to all the farmers, and remaining 52% of farmers are still dependent upon the nature's rain-fed crops or on the rain, and they, because of the much dependence on the rain and natures, they face a lot of natural calamities, and that becomes a very difficult situation for the farmers, how to come out from this situation and once again start the agriculture production. 52 points of the farming households are indebted. See, this is another highlighting point. Although we are financing under KCC from the different organizations, different financial institutions, and there are private stakeholders are also there who are lending, but still 48% are not under the credit. They have to be brought under this credit platform so that they can be also benefited with this benefit of the you can say the benefit, and simultaneously
ये क्या हो गया कहीं भी माइक खुले हैं
and simultaneously, so they can get a credit from the bank and they can grow they can develop their cultivation or farming practices in a better manner to add more production to the country. 30% of the rural households still opting for a non-institutional credit as per the report. So here also, out of total credit offtake from the public sector bank or financial institutions, the 30% still in the hands of the non-institutional money lender. You can say the money lender at the village level. So they charge very high rate of interest, and the time has come that we should support all these farmers to come out from this clutches of the money lender, and they should get the credit from the public sector bank or other financial institution. The very purpose of elaborating all these points are that now we have to motivate the farmers at the village level by conducting so many programs that they should join in this credit program, KCC program, through the nationalized banks or financial institutions, so that they can get this credit at a cheaper rate and they can grow better. Next.
All the participants are requested to please mute microphone.
Source of agriculture credit. See, there are two type of sources. One is institutional credit and other is non-institutional credit. Institutional credit is aims is to provide credit at cheaper rate of interest. This is being done by the all nationalized banks and financial institutions like RRBs, cooperative bank, and there are other sources. Here it is. There is a second source that is non-institutional credit. Is a traditional source credit, also known as the informal source of credit, and this is almost a money lender, and they charge very high rate of interest. So the cost has become very high for the farmers to take this non-institutional credit. We have to develop and we have to promote and educate the farmers in such a way so that they should rejoin the nationalized bank or the institutional source of credit, so that they can get the benefit from the government of India also what we are giving through interest subvention and lower rate of interest, or I can say 7% of the rate up to 3 lakhs in KCC. The other source is an institutional source of credit card in a different forms. Like first is commercial bank, provides loan to all the agriculture purpose for short term, medium, and long term. Here we cover under commercial bank, we finance for the short term like fertilizer, seed, and other, and for maintenance of farm animals, farm assets, and to some extent consumption expenses also for 10%, and remaining we are financing for the term loan also if somebody some farmer wants to establish a dairy unit or orchard or something. So that is also being covered in the KCC, and it is being financed by the nationalized bank. Regional rural bank, this is almost similar to the nationalized bank. This is all RRBs are sponsored by nationalized bank. They are opened up where there is a no banking facility. The purpose of opening of RRBs was there where nationalized banks are not there. They should go and open so that credit reach should be available to all villages, all farmers. And third is the cooperative credit societies. This is a traditional method of the banking in the society, and that now it has become a good source of agriculture credit. And as far I know, 60% of the KCC borrowers are still taking facility from the cooperative banks only. And their aim is also to ensure timely and rapid flow of credit to the farmers. And they charge lower rate of interest as compared to the nationalized bank, also 0.5% or so, little bit that only. So this is another third source of credit for the institutional finance. And fourth is the self-help group. This is a recent development for past few years that in village area they form a self-help group. They take loan from the bank and they distribute among themselves also for the agriculture purpose. So this has also become a good source of the farmers at the village level to take up. And they do not, sometimes they do not charge any interest also. And if at all they are charging, it is a very low rate, and it is SHG is developed in the concept of the mutual help. So this is these are the four sources of institutional credit for the farmers. Next. Types of agriculture credit. Agriculture credit is basically three part: short term, medium term, and long term. And duration for short term is not exceeding 2 years, and medium term, that is 5 years, up to 5 years, and long term credit more than 5 years. Purpose: to carry out farming and other activities like meet expenses for purchase of seed, fertilizer, water, high variety seeds, etc. And other farming needs also, even up to post harvest, these all are covered under the short term credit. The second, the medium term credit: purchase of cattle, equipments, tractor, farm machineries, and make improvement on the land also. So this is the purpose of the medium term loan, which is being sanctioned by the financial institution. And here they have to pay in a half yearly or yearly installment or monthly installment as fixed by the bank. Third is the more than 5 years. This is for the irrigation facilities. If they want to fix in the, they want to install in their farm, and making permanent improvement on the land, like land leveling, land reclamation, all these things which are the long duration activities, and its effects also being for the long time. So here repayment period may go up to 12 years also, and beyond that also if bank wishes. But generally these three components of loans we are granting to financial institution. Repayment, similarly, normally it is repaid after the harvest of the period or within 1 year. And secondly, for the medium term loan, after 5 years, means up to 5 years they can pay, or beyond also there is no issue, but installments are being fixed as per the income generation from the activity. And here the long-term half-yearly or yearly installments based on the economic life of the assets and income generation. Same way, if some farmers go for orchard or palm forestry, so the agriculture forestry, then in that case also we can finance to a long-term loan where, and so many constructions are there in the farm, like poultry house, these poultry house, animal sheds. So these all can be covered in the long-term loan along with their working capital and animals. Here, Government of India is giving some initiatives to the farmer. First, focus on agriculture credit and priority sector lending. So a special category has been formed by the Government of India to focus more on the agriculture lending in the name of priority sector lending portfolio. And almost all financial institutions are having a wing in their headquarters who monitors these priority credit sectors and how the credit flow is there in the branch level or the field level through their branch operations. Second is introduction of KCC 98 to meet short-term credit need. In 1998, it's a special KCC was devised, especially KCC was devised to lend short-term credit, and this was a uniform system introduced by all the financial institutions. Prior to this, they were doing it in different name. So somebody was telling as a crop loan, crop production loan. So different name was there, and a uniform framework was developed in 1998 for named as a KCC to meet the short-term requirement of the farmers. The interest subvention is the third initiative which we have started from the 2006 and 7 MISS and PRA. Here, government gives interest subvention to the lending institutions. Presently, it is 1.5%, and to the good repair who repays their loan in time, like within 1 year of the withdrawal, they get 3% of the interest subvention on the loans which they get from the bank. So this is an annual activity, and ministry used to release a huge amount of fund in terms of the interest subvention, which is in turn through RBI and banks being distributed to the and these to the farmers. The fourth is a collateral-free loan up to 1.6 lakhs. For agriculture KCC, up to 1.6 lakhs, farmers need not give any collateral security. Only it is being treated as a hypothecation of the crop which he has grown. And beyond this only, 1.6 only, he has to bring some collateral security as per the detail. It will be discussed in the next slides. So the basic is this exemption is given that up to 1.6 lakhs of KCC. Nobody else should, no farmer should bother that how they will get. They have to bring only the required documents and they can get the KCC. KCC extended to animal husbandry and fisheries in 2018 and 19. From 2018-19, fishery and dairy activity, animal husbandry has been also brought under KCC. And here, interest subvention. First of all, in the KCC, we are giving on the working capital of these activities, like animal husbandry, the fodder cost, medicines cost, and other maintenance cost for the animal, that is being covered in the KCC along with crop production of the KCC or independently. Similarly, the fishery loan are also being covered along with KCC, crop production, or independently also they are doing. And this will be treated as under the name of the KCC. But working capital loan, working capital requirement will be covered under the KCC. The last one is the KCC and MIS portal under the digital innovation in agriculture. We are in the process of developing a KCC MIS portal where all the data will be captured, and in due course, this claim process and claim processing and distribution to the farmer's account, or you can say the credit of the interest subvention portion to the farmer's account. will be online, and there will be minimum manual interference. So we are in the process, and I think in the next class, the Pallavi madam is going to cover this portal also, how it is being developed, and what are the things to be done for full digitization of the KCC. This is the ecosystem of the KCC, background and evolution over time. Here actually, the history of the KCC has been elaborated in a nutshell. This KCC was introduced in 1998 with the objective of providing the short-term credit based on the land holding. Initially, it was on the land holding. Credit support to farmers to readily purchase agriculture inputs like seed, fertilizer, pesticides, etc., and draw cash for the production need. Here, earlier, if you remember, the KCC or crop loan used to have 60% for kinds and 40% for the cash component. But after evaluation of the KCC, this has been merged, and simply we give the total cost of cultivation. With that, they can meet the requirement of seed, fertilizer, pesticides, etc., and other labor expenses and other charges, electricity charges. This all comes under the production. Third is the KCC was further extended for the investment credit in a requirement of farmers, allied activities and non-farm activities since 2004. So this was also extended for the same animal husbandry as animal husbandry and fishery and poultry, other ruminants, even up to beekeeping, mushroom and sericulture. These all activities have been already included, and working capital requirement in these all crops are being covered under the KCC along with crop production. Scheme was revisited in 2012 to facilitate issue of electronic credit card, that is RuPay card. In 2012, the RuPay card was introduced. The purpose, as its name is there, KCC Kisan credit card. The card came in the picture only after 2012, where a plastic card was supposed to be given, and it was in some area it has been distributed to the farmers also. With that, they can withdraw the money through ATM also. And even this card is so useful that in mandi and commission agents can credit their proceeds price also through this card to the KCC account. We can draw money, we can swap this card and purchase the seed, fertilizer, and all these items in point of sales. KCC extended to animal husbandry and fishery 2018-19. This already I have explained. Background of KCC evaluation over time. Same way, KCC evaluation, same 1998, the credit card was introduced, providing farmers with adequate and timely credit support from the banking system and agriculture for agriculture activity in a flexible and cost-effective manner. This is the history of the KCC evaluation. 5 to 8 to 1986, again KCC has been, some changes has been brought in this 2004, 2012, 2019, and from 2019 this Aadhaar linkage was made mandatory for availing the KCC loan, and ISS expenses extended to include KCC working capital loans for animal husbandry. Here also Aadhaar is made mandatory. Salient feature of the KCC model. This aims to provide adequate and timely credit support from the banking system, institutional finance. The purpose was that we should provide more number of farmers as a KCC from the banking institutions. Second is short-term agriculture loan up to 3 lakhs at the concessional rate of 7% per annum for the farmers engaged in agriculture, animal husbandry and fisheries. Here, up to 3 lakhs, Government of India insists that banks should finance at 7% interest, and if happens to they get the prompt repayment incentive, the actual applicable rate for the farmers will be only 4%. So this is the incentive by the Government of India. And a single window system with a flexible and simplified process. So a single window means a single KCC account will cover all their requirement, their short-term requirement, their maintenance expenses, even the consumption expenses, and plus purchase of animal and other term loan in terms of term. And prompt repayment incentive is the 3%. That is the already I explained that those who pay their installments and amount due in time, they get the 3% of the interest against the PRA in the name of PRA. Government of India provides the interest subvention to eligible banks up to 1.5% for the currency to KCC. Those banks who finance the KCC up to they are getting the 1.5% for the. It's a reduced interest rate at to 4% per annum for early loan repaying farmers and will encourage them to avail the benefit of short-term loan under schemes. As I explained, that banks are giving at 7% loan because 1.5% by government is giving the incentive to the national all banks to finance KCC under 7%, and 3% is PRI, prompt repayment incentive. If they are eligible for this and if they get this 3%, their loan rate of interest remains only 4%. Farmers can easily apply and can avail credit from the ATMs through RuPay credit card, RuPay Kisan card, debit card. So this card is enabled for the purpose of farmer to take the money from the ATM card, need not go to the bank branches all the time for availing the disbursements. Any number of transactions can be done, withdrawal and repayment. This is applicable for both for the branch operation as well as the ATM operations. Kisan credit card valid for 5 years, subject to an annual review. Annual review only because every year we are renewing the KCC, with reviewing the KCC and increasing the 10% limit. So every year it is to be reviewed only. So no collateral is required. Loan required for loan up to 1.6 lakhs. So beyond only 1.6 lakhs, they have to provide some collateral security. Bank will issue Kisan credit card within 15 days after verifying the farmer's credentials or shall show the reason for rejection. If it is not available, then they will show. Otherwise, within 15 days, they have to issue the Kisan credit card and issue a debit card also along with that. One-page form and one-time documentation at the time of registration and simple declaration from second year onward is provided to make the process hassle-free. One-page application, which is attached next to the slide. Ministry has developed one-page application, and this application you can fill up in the branch also, and if CSC also can, customer service point also, if you can get time, we can fill up and submit to bank for the sanction. When it will be digitized, I think these all forms will be available in the portal. KCC component, Kisan credit card. Objective to provide the adequate and timely credit support under single window of the farmer. At one place only, they will get all their farming requirement. Short-term credit requirement for cultivation of crop, post-harvest expenses, produce marketing loan, consumption requirement, and working capital for maintenance of farm assets and allied. These are the 5 components of the Kisan credit card. And accordingly, this short-term credit means they require the fertilizer, seed, and all these things. Post-harvest means some process is required in the after post-harvest. That expenses also will be covered here. Produce marketing loan. So if the produce are being kept in the warehouse receipt, against the warehouse receipt under E and WR, there also this facility will be provided at the same rate which is applicable to the KCC. His consumption and other maintenance is already clear. And the second is for long-term credit, which is the investment credit requirement for agriculture and activities. This is for the creating some assets like purchase of animals, purchase of some etc. will be covered in the term loan component. And these are the 2 major components of the KCC. Eligible lending institutions. See, farmers, individual joint borrowers who are honor cultivators. These are the farmers who are cultivating. Those farmers who are cultivating the individual farm and then joint, they all are eligible for getting the KCC loan. Tenant farmers, oral lease, and sharecroppers, they are also eligible for getting the KCC loan under the Flexi loan scheme, which is up to 50,000. And here, some governments are issuing the certificate also as a tenant farmer. Otherwise, the local authority and bank can take a decision. They can finance to the tenant farmers and DC, yeah, DC also, oral leases also. And third is the self-help group or SHG or JLG, where some farmers joins together and make a central group or GLG. They can also avail the KCC loan from the institutions. So it's here the certificate provided by the local administration Panchayati Raj institutions regarding cultivation of crop. This is applicable for the tenant farmers and the oral leasing. And if they are not able to get the certificate from the concerned government, they can submit an affidavit submitted by the landless laborers, sharecroppers, and owner leasing, giving occupational status. So these documents, if they submit, they can also get the KCC from the financial institution. Eligible lending institutions is public sector bank, all public sector, private sector banks having their loans are given by the rural and semi-urban branches, small finance banks, regional rural banks, state cooperative banks, district central cooperative banks, and computerized primary agriculture credit societies. These all are the six institutions in the Indian economy. They support to the farmers in granting the KCC loans. Eligible for MISS and PRI. Here, the subsidy, the MISS and PRI subvention, inter-subvention portion is being given by the government of India. And under this modified ISS inter-subvention scheme, the rate is 1.5% of the for the bank. Whatever the rate charge on the loan availed by the farmer, they charge 1.5%, and that this 1.5% will be reimbursed by the government to the bank. And prompt repayment incentive in terms of 3% when farmers repay the loan in time or within the stipulated time. For crop production is 1 year, so he becomes eligible for the 3%, and this amount is being credited to the in the farmer's KCC account. Eligible for MISS and PRI. See, this for eligibility to become a farmer, to avail this facility, the number one is for cultivation of crop and post-harvest expenses up to 3 lakhs. Up to 3 lakhs, he will get the MISS and PRI. Second, for allied activities related to animal husbandry, dairy, fishery, lakh cultivation, mulberry cultivation, sericulture, and beekeeping. Under these activities, he is eligible for only up to 2 lakhs of the 2 lakhs. This will be covered under the interest subvention scheme and for PRI also. The IS and PRI amount are to be calculated on the loan amount from the date of disbursement up to the date of actual repayment of the loan by the farmers or up to the due date of the loan fixed by the bank, whichever is earlier, subject to maximum period of 1 year. And the PRI in benefits would accrue to only those farmers who repay the eligible loan on time. That is 1 year, within 1 year. It is mandatory to link the KCC accounts with Aadhaar for availing the benefit of KCC. This has been recent modifications in the 2022 that now these facilities are must be all KCC loans are to be seeded with Aadhaar, and this will be available. And KCC interest subvention will be available only in case of KCC loans. This is a single page format which has been devised by Ministry of Agriculture, and now we are going to upload this in the portal also. This application independently also they can take printout, and branch will have this copy. All banks will have the copy, and they can submit this application along with their land record, Aadhaar detail, or if any bank details are there, to the nearest bank so that they can get the hassle-free and earliest the KCC loan from the bank. So this is the single page application. So thank you very much. Basically, I have covered that KCC history from the how this KCC has been introduced, who are the eligible institutions, who are the eligible farmers, who are the what are the government's initiative in that government is giving, and these all will help you to motivate the farmers in the village area so that maximum number of farmers who are not covered under KCC can be brought under this KCC. Thank you very much.
Good morning. I am Sanjeev Raman, Deputy General Manager NABARD, and I am as faculty at BIRD, Lucknow. And for preparing this presentation, I have taken help from farmer producer organizations, some farmers and bankers and DDMs of NABARD from 12 different states. From southern states, Kerala, Tamil Nadu, then Maharashtra, Gujarat, Madhya Pradesh, Chhattisgarh, Jharkhand, Odisha, Bihar, Uttar Pradesh, Uttarakhand, Assam. So that I could present, because all over India there are slightly different processes, but overall, as per RBI guideline, overall broad guideline are the same. And as a farmer, how to get this KCC? So I will cover the eligibility portion, application form. I have also I will be sharing application form for on KCC and crop loan, and application form on KCC animal husbandry and fisheries. Then documentations requirement and whom to approach, lending institutions. First of all, eligibility for KCC crop loan, all farmers, whether they are individual, joint borrowers, who are owners, owner cultivator, or tenant farmer, or oral lazy and sharecroppers, or even self-help groups, joint liability groups of farmers, including tenant farmers, sharecroppers, or are eligible as per Reserve Bank of India guidelines. Now, for allied sector, KCC, animal husbandry and fisheries, Reserve Bank of India already issued on 4 February 2019 guidelines, and as per that, eligibility is as under. First of all, whether it is crop loan or animal husbandry loan, scale of finance, it is being finalized by district level technical committee. It is in each of the district. In some district, district cooperative bank, they are the convener. Chairman is district magistrate, and in other district, maybe animal agriculture department or other department may be the convener of this committee. NABARD, DDM, they are member there. Agriculture department, other departments, some progressive farmers, special invitees, Krishi Vigyan Kendra and some other people, they are special invitees, including some progressive farmers. So these, because one question was there, that scale of finance or loan component that should be dynamic. Actually, it is already dynamic, and every year it is being reviewed. Committee sits there. 5 progressive farmers are special invitees, then departments, then everyone is there. Now the calculation, there is rule. How much production is there, average selling price, what is the cost it is going to be in cultivating 1 hectare, and on the basis of that, scale of finance is being finalized for crop loan. Similarly, for animal husbandry, every year it is being finalized, and as per the requirement, it is being updated. It may be district wise or it may be state wise. It depends, because final power is district with the district level technical committee. They are finalizing, and state level technical committee, they are waiting and approving, like that. Because purpose of this DLTC is localization of scale of finance. Now, eligibility for animal husbandry and fisheries, rule is that, first of all, for poultry, they should poultry and small ruminant farmers, poultry farmers, all joint borrower, joint liability group, self-help group, tenant farmers, all are eligible, but they should have owned or rented or leased shed. Because when somebody is financing the working capital, because Kisan credit card is a type of working capital, so when they are financing, they should have their own or their rented or leased sheds, on the basis of which they will be keeping the poultry or the small ruminants, and bank will provide this KCC under animal husbandries. For dairy sector, again, own or rented or leased shed is required. Then for fish farmers, from individual to SHGs to GLGs to women group, means those who are farming, who are fish farmers, they are eligible. And again, we are see that beneficiary must own or lease. They must own or lease the part of the pond or tank or open water body, raceway, hatchery, rearing unit, for which they are applying for the KCC fisheries. And if, as per requirement, local requirement, if they should also possess necessary license, if it is required. Maybe in most of the state it is not required, then there is no requirement for, but for that activity, if there is an requirement of license, then they should possess that. Marine fishery, again, they should own or lease registered fishing vessel or boat, possess necessary fishing license permission, then KCC fishing for marine fisheries also could be granted. For existing KCC crop loan holder, if they are involved in animal husbandry or fisheries, then they can also get KCC animal husbandry and fishery. Rule already in last session it was covered, an amount of coverage for interest subvention, but bank can provide higher amount of loan without any interest subvention. Now application form for crop loan, I have just shared one application form of a bank. Somewhat near this forms will be available. One question I have seen in the chat box was that whether we can apply online or we have to visit the branch. Now it depends on the branches, banks. Many banks, they have started online application of KCC. You can apply online. And once it is finalized, they have done the scrutiny and process, then finally you can go there for disbursement purpose or final sanctioning, but you can apply. I am not audible? I am audible or not?
Audible, sir, audible.
Okay, because some of the participants, they are sending messages, I am not audible, therefore I was asking. So like this form, most of the banks, they will have near about this form, which contains basic details, then land holding pattern, basis for request of limit, why they want this KCC, means how much hectare they are or how much acre they are cultivating, what are the crops they are cultivating. One question again is whether a person who is availing KCC cropland, whether they can apply for animal husbandry. Yes, if they are doing the animal husbandry business, then they can also avail the animal husbandry crop loan, because this animal husbandry KCC, because this KCC are for two purposes. Crop loan is for raising crop and animal husbandry is for raising the animals. No, bank cannot put a cap on number of beneficiary for KCC, because Kisan credit card is a bank product, and if a person or if farmer is eligible, they should get the KCC. There is no cap. Now income from agriculture, this is the format. If tentative income from agriculture, that is to be put in this form. Then position of payment of income and bill tax. If you are paying any income tax or bill tax, you can include. Otherwise, nil. It will be nil. Asset owned, that is to be indicated. Liabilities, if already you have taken borrowed some loan or there is some other liability, you should indicate. This is normal standard format. Then it depends on like 1.6 lakh loan, there is no requirement of any guarantor, collateral or security. So particular of guarantor, it is if higher loan is required, bigger loan is required. Actually, no bank can deny KCC animal husbandry because they have taken crop loan. I will tell you what are the, how as a farmer, how I can get a KCC. So this is the declaration. In the declaration, when a farmer sign, the declaration is that any credit facility which I am asking from the bank, if any declaration is wrong, then I will be disqualified from getting the credit, or any other things like if I will not borrow from any other agency without the permission of the bank, because on the same crop or same animal, I can't borrow more than one. Then whether the applicant's co-applicant guarantees are related to any scenario like that. This is a standard prudential declaration which is in the form. Now application form, animal husbandry schemes under Kisan credit card. Again, purpose of the loan, amount of loan required, dairy farming, poultry, goat rearing, pig rearing, then particular of the applicants, Aadhaar number, voter ID, PAN card, whatever officially valid document which the farmer is having, they can provide, one for address proof and one for ID proof. There is one guideline which is regularly being updated by Reserve Bank of India, which is for know your client. Government of India is using anti-money laundering instructions. Based on that, Reserve Bank of India is using know your client KYC norms, and in the KYC norms, officially valid documents it is listed. So bank will tell what are the official valid document which is at that time available. So based on that OVD, official valid document, KYC is to be done of the farmer. Now social category, it is in the farmer, details of existing loan if there is any loan, particular of total land holding of the applicant and the crops, then expenditure details for working capital. This is the portion, cost of feed and fodder, cost of medicine, vaccine, cost of insurance premium, other miscellaneous expenses, because all these things will be covered under the working capital under KCC animal husbandry. So from where to get this? In each district DLTC is finalizing and they have breakup. All these points, district level breakup is there. So that farmer while applying can use that breakup in filling this form. Then again, income details, dairy, sale of milk, poultry layer, sale of egg, like that. So that one question is whether civil score is very bad, then whether KCC could be rejected. Yes, bank can reject. Other than if there is a special drive, a special instruction from government that such farmers are also to be included. Otherwise, banking norm is that if civil score is bad beyond a point, is much below beyond a point, then it is being rejected. Then name of the bank and branch, security proposed to be offered. If it is up to 1.6 lakh, not required. If it is higher loan, because higher loan is, yes, civil score is required. Then security may be required because it is a standard format for small and marginal farmers, oral lessee, and even big farmers. So all things are there. Last is proof of identity and residence, Aadhaar card, voter ID, PAN card, electric, etc. It will depends on the official valid document which is valid at that time as per RBI norms instruction, which is based on anti-money laundering AML instructions of Government of India. Then proof of land, ownership, lease, deed, oral lease, etc. Copy of saving bank passbook and sanction letter for existing loan account if already present. Because if existing loan account is there, then it is easy to sanction. One question was there, banks are not sanctioning those who have crop loan. If the crop loan, KCC crop loan, they are doing fine, then the bank will be more than eager to finance the KCC animal husbandry, because already credit history is there, and credit history is there, so it is easy to finance a loan to a person who already is availing crop loan and are a good borrower. Then acknowledgement by animal resource department, it will depend on state wise which department is dealing with. maybe if it is fisheries, then fisheries department, then animal husbandry, some state it is called veterinary department, in some it is called animal husbandry, in some Pasupalan Vibhag, like that. They will then put the detail and certify that above details they are correct. Then they will send it to the branch, and branch will process. Within 15 days, they have to process the application, yes or no. If everything is okay, KCC will be issued. If there is some problem, then they have to indicate the problem, and then they can reject also. Now comes the important part, documentation part. What are the documents required? Because when we are telling there are issues in issuing of KCC, we should remember that at present more than 7 crore KCC are active in the country. They are active KCC. So 7 crore plus. I don't think any other loans, so much number of loan has been issued. 7 crore KCC is working. So we can understand that the system of issuing KCC is robust. Only thing is sensitization at different level. Therefore, these programs are being organized to complete the sensitization process, complete the cycle of sensitization. Now in documentation, first of all, banks have options. Customer can see in their area which branch they want to get this loan. So some banks, they are providing online application. They can directly fill the online application form, or in other banks, paper, hard copy, they have to fill it. Then KYC document is required, which is officially valid documents, maybe PAN card, Aadhaar card, etc. for identity proof and address proof. At that time, bank will indicate that as per Reserve Bank of India guidelines, which are the officially valid documents. So normally they require two, one for address proof, one for identity proof. Or even some identity, they will inform that same identity card will be used for both. So that is to be issued as OBD. Then even one identity can also work, but that should be in the guideline. Then civil report, bankers, they will take out the civil report. If let us say in civil report or any credit information company report, 300 to 900 is the parameter. If anyone is getting marks, 300 is maximum risk. What is the marking pattern? I will tell you. 300 to 900. 300 means maximum risk. The customer is a maximum risk to the bank. And 900 means minimum risk to default. So this is the pattern, 300 to 900. So up to a certain marks, if a person is getting a certain CIBIL score, above that is considered by bank. It depends on bank. Some bank, they are going for lower score. Some are going for higher score. So it depends on banks. Some banks even for a special case like debt waiver is there or debt relief is there. Then after that, government give exemption and government issue a special notification, budget notification, special instruction that for that persons, those persons who have been given debt waiver, CIBIL score, even low CIBIL score may be also accepted. Otherwise, if there is no instruction like that, then they can't ignore the CIBIL report. The minimum criteria, which as per the bank guideline is required, they have to fulfill. Now, let us say in CIBIL report, the score is -1. -1 means there is no credit history of that person. Then there are other three credit information company. Then the bank will take out another CIBIL, another credit information company's report. Again, if there is also if there is also there is no data pertaining to the customer's any credit history, then bank will without CIBIL report they can go and issue the KCC. So if CIBIL is there, okay. If there is no data in CIBIL, then they will go for other CIC. If still there is no data credit history, then they can sanction without CIBIL report also. Now other documents required is khasra, khatoni. Now khasra and khatoni, it depends. It depends state wise, because 10, 11 states I have taken data. In some state, khasra may be issued by Patwari, Lekhapal, Tahsildar, or any whichever that state government has given power to issue that. Then Khatoni, many state, these records has been digitized, like Uttar Pradesh or Madhya Pradesh. So you have to see in your state whether it has been digitized. If it is digitized, then it is very easy. Like in UP, it is Bullock site. Another states, other sites are there. Then it is also easy for the bank. They can directly check everything, all data on portal, and they can also, if loan requirement is there, higher loan requirement is there, they can mark there on the portal. Also, they can create the charge if required. In non-digitized state, again, Patwari, Tahsildar, or any other competent authority which has been authorized by state government to issue, they can issue this, and bank accepts those things. Stamp details, again, state-wise, like in many states, it is exempted. Certain loan amount, yeah, certain amount is exempted. In other state, there may be charges up to 5%. So state-wise, stamp details, it depends. Like in Uttar Pradesh, margin money above 1.6 lakh, it depends, because there are guidelines. Like if it is a marginal farmer, 5%, then if it is somewhat bigger farmer, 10%, then if it is some more bigger than 15%, 20, 25%, up to 25% margin it can go, 5% to 25%. It will depend bank wise, and also the amount of loan, because minimum is 5%. If it is crossing the minimum limit of 1.6 lakh and above, then it will depend on that bank's internal policies. Now, hypothecation agreement is required up to rupees 1.6 lakh, because there is no security and hypothecation requirement for this loan as per RBI guidelines. So only the crop which is raised on the land, that is prime security, and nothing extra is taken. Charge will be created on Khatoni. Then saving account opening is also required. If the person already has an account in that bank, no problem. Otherwise, saving account will be opened along with this KCC. Khasra should be in the name of the farmer, or relevant documents should be there. LPC is required when the land is in their name, or lease. If there is a lease agreement can also suffice. You can see G, particulars of total land holding of the applicant and crops, name of the village, Jag and Khatian number, then owned, leased or sharecropper. There is option. When there is a option, means they can have all this. Either it is owned, or it is leased, or they are sharecroppers. But for each of these, they require documentary proof. Okay. Now, of crops to be cultivated, that is to be given, because every crop has different scale of finance. So for finalizing that, they require the crop details, breakup of area where crops are to be cultivated. Suppose the person has 2 hectare land, 1 hectare for wheat, another hectare for gram, or like that. That should be also be given. And in Fasal Bima also, this is being used after KCC. Fasal Bima, based on this declaration and based on this documentation, the farmer will get the Fasal Bima. Now, loan application along with documents, land holding certificate, Khasra Khatoni, activities proposed to be undertaken in the field. Bankers will generate his or her CIBIL score, and if found suitable, they will calculate farmer's CC limit for 3 to 5 years based on a scale of finance. And along with scale of finance, for crop loan, 10% post-harvest losses, household consumption, 20% on repair maintenance, insurance, 10% cost escalation for success. These all are allowed. So normally banks calculate all those things. This is above the scale of finance. If 10,000 is a scale of finance, then they can go beyond 30-40% above that. That is in the power of bank to do that. Now, whom to approach as lending institutions? So any bank branch which is nearer to the farmer, that will be better. Any bank branch which is nearer to the farmer. But as there is no service area approach and it has been waived off, so from any bank, any branch, the farmer can get the KCC. They can avail the facility of KCC from any branch which the farmer is interested. But it is suggested that try for the nearby branch, because it will be easy to service the account, to have a good relation with the bank, and also after KCC, They can, if they are a good user of KCC, they are a regular repair, they can in future also get a bouquet of other loans from the banks, because KCC will create history, and that will help the farmer in getting other loans also. Security up to 1.6 lakh. Only the raised crop will be the primary security. After that, if up to 3 lakh there is arrangement of purchase, then bank can waive, and above 3 lakh, then any loan above 3 lakh, hypothecation and other banks rules as per board approved policy, they have to take the security and hypothecation, whatever is there. Facility of online creation of charts. If in a state there is a facility of online creation of charts, then bank use that. Otherwise, it is done manually in hard copy. Thank you. Now.
So thank you all the participants for the patiently hearing to the previous speakers. We have covered the basics of the basic ecosystem of the KCC, and now taking it forward, I will just take you through what the government initiatives are. And as JS sir told in the morning, we are planning to have a second phase of KCC saturation drive. So what is all about that I will try to cover, and along with the students of KCC PMF, KCC portal. So just taking ahead from the Sanjeev sir session, first we'll try to see how this credit limit for the loan amount are being fixed. So you can see we have seen the short-term credit limit. So it is for the 5 years, but in the first year, it is considered as a scale of finance, which is again decided by the DLTC, varies from state to state, district to district, and it is multiplied by extent of area to be cultivated. And plus, we have seen, apart from this cost of cultivation, there are a few other things that have been added in the short-term credit. So that is a 10% limit of post-harvest expenses, the household consumption requirements, plus 20% of the repair maintenance expenses for the farm asset. So, and this crop insurance, PIS, that is personal accident insurance scheme, and asset insurance. You know, this PMFPY, Pradhan Mantri Fasal Bima Yojana, was earlier compulsory for loany farmers. So hence the crop insurance premium was added to the KCC loan account, which is there in the short-term credit limit. And this way, calculation, we got the credit limit for the first year. Subsequently, this credit limit will be based for the next year's calculation. So in the next year or the second year and subsequent year, so first year of the limit, the cross cultivation has arrived, as we have discussed, plus we'll add 10% limit, and it will be every year, second, third, fourth, that 10% escalation will be there. So by this way, we'll go for the estimation of term loan component, short-term loan component for the tenure of KCC up to 5 years. So that is for the general farmers, apart from marginal farmers. But since marginal farmers do not have land holding and or very minuscule land holding, even less than 1 hectare, so the government has decided to give a flexi limit ranging from 10,000 to 50,000, and this is called as a flexi KCC, and this is at the discretion of the bank manager. So even the marginal farmers with minimal land holding can apply for this KCC, and they will get a loan based upon the crop they are cultivating, the cost of cultivation, and the other components that we have seen. So post-harvest warehouse storage, related to credit needs, other farm expenses, consumption needs, all etc., they have also been added to this component of flexi KCC. And there is term loan investment for the equipment, dairy, backyard poultry, as per the assessment by the branch manager, without relating it to the value of land, because land is very minuscule. And this is the composite KCC limit fixed for a period of 5 years on this basis for the marginal farmer. So we have two distinguishing farmer category, the general other farmer category having more of the land, and this special category of the marginal farmers having minuscule or less. So just to give you an example or the illustration that how it works in terms of calculations. So this is the example. If a farmer is cultivating multiple crops in a year, and he has 2 acres of land holding, and he is cultivating 2 crops of paddy and sugarcane, that the cost of cultivation is taken into consideration, plus investment. And for investment and allied activities, suppose he has a dairy unit of 1+1, then the unit cost of 20,000 per animal. Then for 2 animals, it will be 40,000, and plus replacement of pump set in the third year. So all these costs are calculated, and you can see these costs year on year. We have seen the some components like 10% of the post-harvest household expenses, consumption, 20% farm maintenance. Likewise, you go on calculating and adding 10% subsequently in every year of the base, and you will get a limit of loan amount for that particular farmer at the end of 5 years. And for the term loan component, we are adding the two components, 1+1 dairy unit of 40,000 and replacement of pump set. So the term loan component will be 70,000, and adding both the crop loan factor and this term loan factor, the eligible limit under KCC calculates at 1.32. This is just two examples of how this calculation happens for the KCC limits. Then we'll take you to the KCC and MIS portal that we talked about. So ministry is working on this particular portal, and idea is to capture all the details and to track how many farmers in the country they are availing the KCC benefit, and how many are left out and how they can be covered. So ministry has come out right now. It's all spread across the different banks, different branches, but do not have a single comprehensive database yet. So ministry has worked upon this particular portal, which is, we call it as right now as a fossilgreen.gov.in. And on this portal, this is mainly right now for the use of banks, where they will enter all this data. From the 2022 onwards, all the data of the new KCC that are being issued by the bank, they are all uploaded on this particular portal. And you can see this all in the futuristic view of the government is that all KCC application sanctions will also happen on this particular portal only. So the ministry, as the state government and the banks, everyone will be on the same platform with respect to information that how many KCCs, new KCCs have been issued, how many farmers we have been able to cover, out of which how many are small farmers, how many are marginal farmers, big farmers, KCC for crop cultivation, KCC for animal husbandry, dairy, fisheries, and all other activities. Everything can be easily tracked out on this particular portal. So all the banks, they will try to use this portal and enroll all the farmer application for the KCC and also its subsequent sanction on this particular portal. So right now it is mainly for the purpose of banks. And you can see this just for an example. You can see this is the Punjab National Bank's dashboard. So you can here in this dashboard, we can easily see how many applications have been approved, how many applications are pending for approval. If any applications are in the draft mode, they can be seen, and if any applications are rejected, then that can be also viewed on this particular dashboard. So we'll have this bank-wise, branch-wise detailed information pertaining to KCC issue to the farmers. So this is the general use that the bank branch user is there who will create this particular application, and then there is a role of branch manager who will approve, reject, or delete this application. So this is about the KCC portal. Right now, we do not have any direct facility for farmers to apply for on the KCC portal for the loan, but right now they have to go through the bank branches only. Later on, we can see how we can make it user friendly and more friendly for the farmers as well. We can give you the loans. So now I will take you to the KCC saturation campaign or the drive that we were talked in the morning. And this is very important for the ministry. Ministry has already undertaken such campaigns and the drives previously also. And the idea is to have the KCC saturation. All those left out farmers who do not have KCC account, we are trying to identify them, we are trying to reach them out, and we are trying to cover them under this KCC particular campaign. So last campaign we had last year, that is from 24th of April to 1st of May 2022. It is called Kisan Bhagidari Prathamikta Amari. And there also we try to cover almost 1 crore plus KCCs in that particular campaign. But still, we can find that there are gaps, and this gap needs to be fulfilled so that the farmers can access easily and timely and credit with a very minimal interest. So the background of this is to bring the maximum number of farmers under KCC so that short-term loan can be provided to them at a cheaper rate through institutional banking, of course. We need to run a special campaign for the KCC saturation. The agriculture target we have seen, credit target is 20 lakh crore, and KCC is probably the best vehicle to disburse this agriculture credit target. And to enhance coverage in small and marginal farmers under this formal credit. So the objective is some participants, please mute your mics. So the objective of this Kisan saturation drive, we are first trying to connect it with the PM Kisan beneficiaries. We know the huge drive of Ministry of Supply of supporting farmers with additional income of rupees 6,000 per year under PM Kisan, and in those we have a detailed database of PM Kisan. So for this particular purpose, KCC saturation drive, we are trying to match the KCC database with that of the PM Kisan database. We are trying to validate the existing KCC holder with the PM Kisan database to find out PM Kisan beneficiaries who do not have KCC account right now. And this way we will be able to identify potential and eligible PM Kisan beneficiaries that do not have KCC account till date. And through this KCC saturation drive, we are trying to reach out to these farmers and we are trying to cover them under this KCC. The idea is to enroll maximum farmers under all types of KCC. It's not about only the crop cultivation, but all animal husbandry, fisheries, all the components of KCC will be covered under. So you can see in terms of targets and in terms of numbers, the number of PM Kisan beneficiaries, the database the government is having, we have 10 crores of PM Kisan beneficiaries and number of active KCC holders are 7.1 crore. So right now we have a target of potential farmers of 2.9 crore to be covered under KCC regulation drive who do not have this KCC account. Tentatively, the ministry is planning to have this KCC saturation campaign from 1st of July to 31st of August 2023. That's a tentative date based upon the subject to approval. So, what are the key activities that we need to do under this KCC saturation? So, this will be a 2-month extensive KCC saturation drive that is being planned mainly with the network of banks as a nodal implementers. So, the banks have been given a special responsibility to implement this particular KCC saturation drive with the support of district administration, line departments, NABARD, and PRA representatives. We have been asking the state government officials, the district administration to hold special Gram Sabhas to organize and to sensitize the farmers about KCC saturation campaign. The state and the district administration especially can also involve the financial literacy centers, the banks, the business correspondents, the common service center, the CSC, BLEs who are present at the ground and providing online services of the government schemes to the rural areas. We can help in identifying and mobilizing the potential farmers and also help them to connect with the banks for availing KCC. We have already seen that what could be the process of availing this KCC in the previous session. What are the documents that are required, who are the lending institutes, how they can approach, what kind of documents that needs to be submitted by the farmer. So all these details. So this there is a special role of exchanging from the state government officials, the Samitis, the Atmas, the KVKs. So those farmers who are in your contact. So you can able to sensitize them, you can able to mobilize them and try to also connect them with the bank. So you can tell them about what is the basic features of the KCC, how they can avail it and what kind of documentation is required. And of course, what are the benefits of this particular KCC? It's very important because we have seen that still 30% of our farmers are dependent upon the non-institutional credit sources, the money lenders which are charging very high rate of interest. And of course, on the monitoring part, ministry will do the fortnightly review and monitor all these courses with respect of KCC, number of KCC applications that have been enrolled and number of KCC applications that have been processed, that is sanctioned or rejected. So that we'll have all these things at one single point of time at the ministry level, the data will be there. And for your more information, the ministry is also working on a very large portal, we call it the AgriStack portal, which will have the details of all the different schemes where the farmer is at the center and will come to know the farmer is eligible for which of all the schemes, whether he's getting that scheme benefit or not. So this particular KCC drive as well as this portal information will feed into the whole digital innovation framework of ministry, and accordingly we can able to plan more policy initiatives, more implemented corrective measures in the implementation in this whole ecosystem for the farmers, so that the credit needs of the farmers are taken care of. So this is about the government initiatives and what the role of the state government and the other functionalities that can be in this particular. Thank you very much.